Hello guys, glad to have you on board again today. We finally had a reaction from Wall Street traders. Feels like we finally found some sellers. Not to say they weren't there before, it's just that the previous mood was to basically just fuck them up as long as possible and trying to go as far as we could to the upside, things that we basically tried and failed, which means we're still below the previous resistance level. We reached out to those levels but didn't manage to break them up. Doesn't mean the battle's won already. It's just that now at least we've got some sellers' reaction that we can see clearly through the price action, which is exactly what we were lacking of for the latest few weeks, which means we knew we had bears, definitely had some bearish traders as well, but it's just they were absolutely irrelevant in terms of price action. There was no room for sellers in the latest few days, and now we do have some signs that they are at work. At least we can see them. So I'm back in the job doing some intraday trades because I was waiting for this to show up to make sure that these huge distortions in pricings were at least reaching to potential ending. Not saying this is already over. I need to be setting things really straight. It's just at least right now risks to be just fucked up by irrational price action is just narrowing. Therefore, I think it's a green light to start speculating again on intraday basis trades. So we're just going to do what we're supposed to do when we're trading in those contexts, which means clearly and simply having a look at the economic calendar just to see what the intraday's market catalysts could be and what time they will be triggering, just to make sure you're not going to trigger a trade right before the event or right after the event, but just make sure this is interesting timing for the intraday to help moving prices to interesting prices area. So today we've got nothing really important coming from now for the actual prices, because I'm not going to take care of GBP, mostly going to take care of euro indices and US indices. Therefore the GBP catalyst is not a big deal to me, at least I think it isn't going to be. Could be at some point, but the retail sales not necessarily going to be a big changer as well, but we need to take care of this one at 11 a.m. on my local time frame. The afternoon's catalyst will be accountable for the US trades you might be taking, and I've got a couple to just show you and talk to you about. What we're going to cover up basically is, I think we're going to cover up SPX and Eurostoxx 50, and you can obviously apply those same rules if you rather like to trade the most volatile one, which are the Dow Jones and the DAX index instead. So today, for educational purposes, we're going to cover all of them, even though normally you should just pick one of the two. So either you took SPX and Eurostoxx 50. If you are a beginner, I suggest you take those two because they're far more liquid, therefore less volatile, and also more technical. Those who like risk and are a little bit more experienced, you can go down to DAX and Dow Jones, but you need to be aware that those two are pretty much fucking roller coaster compared. Regarding their composition, the weighting in the index, so it really is going to be more dangerous getting into the second couple, as the first couple is more like a flowing river in which you can do some pretty nice technical analysis and applying the strategy quickly and safely. So first thing you're going to do when you do intraday trades is you have a look at the Asian session. Because we need to have a look at those markets, even though I don't trade them because the sessions are over when I get to trading. What we can see is the Nikkei is pretty much hesitating and is pretty fucking mature, so I think it's about time to sell everyone once again. After being pretty fucking patient, I try to sell in here first time to all indices. Basically, all indices are in portfolio by those areas, and I still have those trades. Let's be honest, I still do have them. but it was pretty much dipping a toe and putting a very far away stop loss. I think now is about time to go a little bit more aggressive on those trades. As we can clearly see, the market structure in here is totally exhausting. As you can see, wave 1, 2, 3, 4, and 5 are pretty much down. Therefore, it's an ABC correction, still below the previous high, still under the previous support. So, god damn it, that's probably just bearish once again to target new lows to come. But obviously, it's not going to go straight line. It's just first we're going to deteriorate the bullish sentiment and eventually trend in the late stages. Shanghai Composite, same thing goes in here, even though it's an obviously a more mature trending, but we can clearly see in here that there is a wave 4 price structure pull backing into the trend channel, into the context channel. Even though this could have been a pretty viable candidate, obviously there is hope for the deal that has been triggering this thing. But let's be honest, it could very well have been wave 1, 2, 3, 4. We would have expected a shorter wave 5 to go down, but obviously an unexpected catalyst in here has been pushing prices to a different situation, a different manner, but in here stop pattern throughout the context. The market has been reacting with prices. I suggest this is pretty fucking mature. It's pretty hard to say we're not going to go higher than that. We could have another push. So please, if you take trades on those assets, make sure the stop losses will be further away from the current prices, and I suggest you put them on top of those resistances. It seems to be impossible to me not to do otherwise. So I would say in here is where you put your stop losses, secured by the next Fibonacci retracement, and we'll see either the price will go up to this fib or they will just fail in here, retrace, and fuck up to trigger a wave 4 kind of trading in here. As we can see, we still have, I think we still have some potential to trade in here, as this doesn't look like a wave 5 to me. I mean, it's not enough of a wave 4 consolidation in here. It's nothing like a consolidation. So in my own perspective, all right, I still tend to believe, all right, this is a pretty fucking dangerously trending kind of wave 4, which means yes, definitely it's a harsh pullback, but we're just pullbacking to the first wave 1. So it's definitely not bullish trending to me, more likely just harshly consolidating because we had a market catalyst. So you may expect that what I've just drawn in here is going to take longer than expected. All right, you can expect this to be ranging for a long time and deteriorating before we actually get to pull down. Because regarding how brutal this has been, you may expect a longer time to deteriorate this trend, all right, because we're going to have to fuck up this sentiment first. So don't expect this to brutally go down and pull back, but most likely expect the market to digest and then eventually push back to final capitulation kind of trade. Big wave 5, normally we should put back in context area, and normally in here I think is a mature area to buy this market. So once again, if you want to buy, I suggest you stand by for a bit. It doesn't seem like it is about time to get into those markets. Most likely just let it go, be patient, and wait for more interesting opportunities to come. So we're into bearish reactivation area on all the markets. Even the Shanghai Composite positive session today isn't nearly breaking the previous day's high. So we're still on a bearish bias globally. So selling is the preference today. It's a range selling context, which means we're below resistances, but definitely not yet bearish trending. So what we're doing is having a look at intraday trades that follow this path. The goal in here is to bearish range. Remember that when you apply the strategy, you need to follow the damn core rules. The core rules is to find a context. It's the first thing you need to figure out. After putting yourself ahead of this question, you need to answer yourself, you need to ask yourself another question: what is the maturity of this structure? We're very early in here in terms of maturity, because if you figure out the range, to me, it's just first time we've been going into this range structure, second boundary, third one, so we're pretty much mature. So I tend to forecast that this bearish range could trigger a trend pretty early and pretty soon in a 1 hour context. We're not going to trade 1 hour. What we're going to trade is 15 minutes. But inside that range, we're going to apply the strategy, but just make sure this is the this is the 5th time this thing is trading, so I forecast this could be pretty fucking mature. All right? So I would suggest the 1 hour range is mature. Therefore, yesterday evening I've been triggering a trend trade attempt. I've been trying to trade in here yesterday eve. Didn't really work well as we're trading higher today. But I'm just going to apply the range, bearish range context structure, which is minimum 61% retracement. This is this level. So I'm waiting for this price to be tested, and after being tested, I think this is the area in which prices may probably react today to the bear side. All right, we do have a sine wave target in here, everything we need to trade this area and highlight this cluster zone. So this is where I'm going to trade today on the SPX. I'm going to look for a 15-minute signal. Remember that the strategy requires a signal plus a triangle of confirmation inside or above the resisting context. So we're definitely filling the last rule as we're already above context. So I'm just waiting for prices to keep their way up and to exhaust this pace, and I think the next time a triangle will show up, and I already set an alert for this. The next time we do have a bearish triangle, hopefully if we do have a signal coming out of sine wave and momentum, I'll definitely take a short entry. The stop loss must be set out of the previous highs. I think there is no necessary, we're necessarily not going to put prices higher. This is exactly applying the strategy. I mean, I know my rules. I know them. So should you? All right, and just as a reminder, I suggest you do guys have to print this thing and put it right next to your computer screen, so just make sure you follow those rules. So just put things real straightforward. So I'm going to do trend range in here, okay, so bearish trend range, minimum 61 retracement inside the context or above, and signal plus triangle. So I'm just going to follow those simple rules. And oh, I see those things haven't been translated. Sorry about that. So it says following the major trend and do not trade before having at least a year of experience. So the validation will be reaching out to the opposite side of the trend channel, reaching out the opposite side of the context channel. There is a mistake in here. Let me just correct that. All right, sorry about that. So there you are. Now you got the corrections. I'll put it out, uploaded in the websites with the corrections. So this is exactly what we're going to apply as long as the conditions are met. If we do have the actual signal and triangle or get in, next step will be validation, then confirmation, then the first target. And the invalidation has to be set if the trend is broken, which means last support or resistance is broken through. The last resistance is in here, so this is where you put your maximum stop loss. If you're a bit more aggressive, you can go with lower levels, but normally we shouldn't even get to those prices, and even more than that, we shouldn't even break them. So I would say for those who are a little bit aggressive, we just want to save a few pips. This is where you put your stop loss for safe traders. I suggest you could put your stop loss just right here. Normally we shouldn't even reach out to this area. So this is exactly what I'm going to do. I'm going to try selling in this area only with a signal. As we can see, sine wave is already okay, just requires momentum to play this game as well. So I suggest if you do take sine waves only, and first of all, we're not even in the area, so first you wait for prices to meet the actual conditions. Conditions is 61% retracement at least. So god damn it, you don't trade right here, right now. You wait for the conditions to follow through. So next thing, wait for another push, and if that push never shows up, then no worries, you just do nothing. You don't necessarily have to take risk. It's just to take manageable risk. Your job is not to take stupid risk to get gains, it's to take rational amount of risk to get into a potential gain. So if you don't follow the rules, you just don't follow the strategy. If you don't follow a strategy, then you're just destroying any rational risk management, any statistical advantage, so you just trade gut trading. So please respect the rules. I mean, if the trade doesn't meet the conditions, and if it reverses just like that without reaching out to 61%, then What's the problem? You just missed a trade. And once again, you just missed a trade. Oh, another trade. Oh, and one another. You're basically losing a trade or missing a trade each and every second. So if you just put yourself too emotional with a trading scenario, it means that you're just losing it anyway. So if you work hard to get a scenario to trigger, and if it just misses the condition, just one condition, by just a tiny bit, then you just don't take the trade. The next time it may just fail the thing, and if you take the decision without meeting the condition, then it just doesn't work. It's something I give you guys to follow by heart. You learn those rules and you play by those rules. As long as you're going to try trading differently, you're just going to destroy any statistical advantage it may provide. So don't be overexcited by trading. Don't be, remember to be patient, remember to be rational decision-making process. I tried to do as hard as I could to get to this actual PDF manual, and there's still a lot to correct. I'm pretty aware of all the emails you've been sending, but you have to know this thing has been translated by many users. The reason why some were speaking better English than others, some will have expressed feelings a different way, so it can be confusing because the entire manual has been translated by 7 persons. So it's basically 7 ways of translating French to English that's been putting all together. And some people have been saying, sending feedback saying, oh, this is really confusing at some point on some translations. So obviously, I've seen some people have been sending me corrected versions of the PDF. So thank you guys for participating. But obviously, I'm going to update this in the next few days, as long as the website will be uploaded as well, hopefully by the end of this week or in 2 weeks from now, because I'll be off next week. But that's basically it. All right, I'm doing anything I can to have a truly viable PDF, but I just didn't have the time to do this translation. So thanks for the guys who've been helping for this. So please don't mind them. They're not professional translators, therefore they've been making mistakes. And obviously this will be corrected through time. So anyway, this is for SPX. Let's do the exact same job for the Euro stocks, and this is what we've got on the Euro stocks 50. So in here we're using the caching contract, so which means it's 9 a.m. to 5:30 p.m. on my local time frame. So this is not the future contracts. We do have a look at the price, overall price structures, and first thing first, we've got a nasty gap in here that you need to assess and have and to bear in mind, because this is going to be important. So we might just try reaching to that gap for the Euro stocks. Either it's going to be resistance, which means we try to get as close as we can, and bam, it doesn't work, or we try to fill it before going down. So make sure that on an intraday basis, that kind of thing, it's more like a swing thing, but consider this as a magnet. The prices are like attracted and irresistibly attracted by those prices. So you need to take that in consideration if you do trigger intraday trades. God fucking damn it. I'm so exhausted by TradingView. I mean, oh, finally. All right, so make sure you go patiently in here, because this is, we're never going to trade. So take Euro, sorry, it's EUSDX, yes. So this is the futures contract, okay, which we use. When you do trade intraday, you have to take futures pricing in consideration. So I would suggest in a 15-minute perspective, we do know there is this gap, and this gap is, oh shit, I should have taken the prices. So the gap is 38 to 45. All right, so let's get back to EUSDX. All right, so 38 to 40. Oh man, God damn it, I forgot. 45 it was, if I'm right. So this is the gap. So in a 15-minute time frame, I suggest we patiently wait for prices to reach out there. This is where we've got the context as well. So I would say today, this is where a trading scenario could be interesting. Trying to get into the gap. So I'll put myself an alert right below this gap. So just I'll be ready to know when the prices are getting in there. It's going to be a selling entry. So same thing goes in here. As we had 61% to retrace at least on the SPX, as we've got our selling area in the DAX, we also know that we've got a very close gap to fill on the Euro stocks. And therefore, I think this is the technical area that may just force us to block on any bearishness so far, as we just first, I think, need to test for this price. So I would say today the Euro Stoxx 50 on an intraday basis is the one that has the highest level of interest because of this very, very attractive area that the prices will probably like to try trading. So I would say wait for this. I've got 3 levels, okay? So SPX 61% has to be traded because those are the rules, okay? So I want this alert to be triggered. Then I want the German DAX to do as well. German DAX has to go at least 11,635, which is same thing goes in here. We need to get close to context, okay? We need to be in the resistant context to trade on an intraday basis. So wait for this cluster to trigger. And then I suggest you patiently wait for this to test this gap, either eventually filling it, and if it doesn't, I mean, if the other two are signaling and that we're still not getting close to this resistance area, then I suggest you put a larger stop loss to authorize prices to get to there, all right? So you need to take that in consideration for your risk management, because this gap can be attracting prices for other perspectives. It won't be technical, it will be swing technicals at plays in here, but you need to take that in consideration. All right, so no 20 pip stop loss if you do trade the German index and everything like that, all right? And I suggest today the couple you should trade is Euro Stoxx and SPX, but using and taking consideration that this must be traded as well. Those trades, if you do take them, has to be contextualized, which means we're 1 hour chart context, which is a context as well. So you'll see that, just give it a time. All right, context on 1 hour, context on 4 hours as well. All right, so Euro Stoxx 50 context. So as you can see, we're trading pretty fucking long time frames. So we're trading 15 minutes, but you can hold those trades into a daily fucking basis. Just give it a second to load. I mean, that's pretty fucking exhausting to have these markets just loading forever. Alright, goddammit. So this is what you have, the gap. We're in the bearish context in the daily chart. So it's a 15-minute trade, but you may keep part of your trade to try playing the daily scenario for those who want to do both intraday swing trades all together, because I suggest what we may trigger in here could be really fucking interesting to trade. If this bearish context reactivate to the bear side, then it would just basically be wave 1, okay, it's clearly wave 1 in here too, big wave 3, wave 4 overlapping, and we're gonna get a wave 5. So normally here I forecast this price to be bearish with a stop loss in here. So you trade a wave 4 kind of trading. On wave 4 you have a trend, which means you put the stop loss up to the next resistance level and you just let it fucking go. It's selling in here, putting a stop there, targeting a new low. It's simple as that. So I would suggest you keep part of your intraday trades, if you do take them, to eventually play that bigger picture scenario. You have to be aware that this bigger picture scenario is a daily fucking chart. It's not going to take a couple weeks to get to the targets. It may probably take 2 quarters. So if you're aware of that, if you're ready to wait, I suggest you do this scenario. You do play with a daily chart scenario on top of the intraday trades you might take today. So don't take it entirely out. I mean, just have a look at this. Today we might be triggering a fucking signal on the daily charts to trade. So it's definitely something that matters in here, and obviously the implications of today's intraday trades are far bigger picture than the actual 15-minute signals that we may be triggering with. Alright, that being said, I'm just going to wish you guys a good day. Be aware that selling the indices really seems to be the most reliable things to do if you still risk manage. So be aware that whenever those trades will manage to trigger reversals, we're probably going to have daily chart reversals, so probably a bearish cycle to play its game throughout this daily chart, which means probably 50 bars. So 50 bars in a daily charts, all right, just leads us to approximately, and that's a minimum 50 bars, all right. So 50 bars is the minimum cycle, and this cycle should lead us to May, to halfway through May. So if we get to this, then yes, it's a long run. If you get yourself in the daily chart, be aware that you might not necessarily get to salvage or just to harvest the results until probably 2 months. All right. So 2 months and a half, or maybe just a quarter from now. Okay, so expect this to be a kind of a long run, and if you're not ready and not prepared for this, then please don't get to this. You take it entirely out on the daily charts, on the intraday charts, and move on to something else. It's just for those who want to play both table at some points. Bye guys, good day, see you tomorrow, see what else we'll have to trade on those intraday scenarios.